Hello, welcome back to the Macro Gamer channel. My name is Mark Cassingham, and today we're going into our weekly numbers for week number 31. This is as of February 22nd, 2025. So let's go into our weekly numbers, as we always do. So, as of today, February 22nd, our portfolio's net worth is $430.05. As always, you see our pie chart of how our assets are allocated. We have our portfolio weekly data for week 31. This is from February 18th, 2025 to February 22nd, 2025. We have a net cash flow of $30.14. So this is a $30 cash deposit right here. So whenever you see the large stair step, that's $30 cash every 3 weeks going into the account. We have a money-weighted rate of return of 0.27%. We have a market loss of $1.55 and no dividend earned. I believe it was Monday. I had a holiday. I can't remember. But this is our weekly data for week 31. Now we have our monthly data for week 31. So this is from January 22nd, 2025 to February 22nd, 2025. We have a net cash flow of $60.10. So that's two $30 deposits over that monthly period. We have one back here in January 29th, and then the recent one this week, February 19th. So those two together equal $60. So every 3 weeks, $30 gets deposited into the account and gets allocated to our assets. We have a money-weighted rate of return of 1.80%, so positive gain of 1.80%. Past couple months were around 3%, but we did have this market sell-off. As you can see, we kind of got a dip down right here just this week. So that's why we're down a little bit on our percentage. We have a market gain of $6.51, and we have a dividend earned of 12 cents. A little bit today. We have our portfolio quarterly data for week 31. This is from November 22nd, 2024 to February 22nd, 2025. We have a net cash flow of $155.11. So we have 5 $30 deposits. We have 1, 2, 3, 4, 5, which gives us that $150 deposit plus an extra $5.11 from cash and extra cash and dividends. So every time you see a stair step up every 3 weeks, $30 gets deposited. Every week we deposit $10 automatic, right? Don't even think about it, just auto deposit it. And then when the account gets greater than $25 of cash in the cash account, it deposits it into the portfolio, and it buys the assets per their allocation based on their percent. So like gold is 30%. So 30% of that cash will go into gold, as an example. So over this quarterly data, we have our money-weighted rate of return of 3.74%. We have a market gain of $10.38, and we have a dividend earned of 24 cents. So this is our portfolio's quarterly data for week 31. Excuse me. Then we have our all-time data. So this goes all the way back to the beginning, right here when we were at $0 when we opened this account. This is on July 21st, 2024, and all the way till today, February 22nd, 2025. We have a cash flow of $404.47. So you see we have our initial deposit of $100, plus we have our deposits of $30 every 3 weeks. So we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So we have 10 deposits, $30 each. So that's going to give us $300. And then we have the initial $100 deposit when we open the account. That gives us $400. The extra $4.47 for cash and dividends. So this is the all-time data from inception, day one, till today. We have a money-weighted rate of return of 11.46%. So we are in the double digits, so it's good. I said in a previous video, if on a year-over-year basis, based on how this portfolio is allocated, if I could be anywhere in the range of 10 to 20%, that would be great. That'd be perfect. We have a market gain of $25.58, and we have a dividend earned of $1.40. So this is our portfolio all-time data for week 31 from July 21st, the beginning we opened 2024 when we opened the portfolio, to today, February 22nd, 2025. Now we get into our weekly percentages. So as always, we have our target dates here on the side, our target percentages. At the top, at 30%, our favorite asset, longest held asset that we've held at this height, or this percent, is gold, which we are using our GLD ETF. Next, we have US dollars at 20% with our UUP ETF. We have commodities at 20% with our USCI ETF. We have stocks at 15% with our RSP ETF. And I made a change here, which I'll go over more when we go to the charts, but we have 10% in US bonds in our new GOVI ETF. It used to be GOVT, now it's GOVI. I switched ETFs. It's still a bond ETF. This is an equal weight ETF. I found a better version of what I wanted, basically. Like I said, I'll go over that. But we still have 10% allocation to bonds, just as we did last week and the week before. We have 5% to Bitcoin with our IBIT ETF. So, for week 31, our weekly percentages. Gold is up 1.60% for a market gain of $2.01. US dollars down 0.18% for a market loss of 15 cents. USCI down 0.01% for a market loss of 1 penny. Stocks down 0.75% for a market loss of 47 cents. Bonds up 0.85% for a market gain of 37 cents. And Bitcoin down 2.50% for a market loss of 52 cents. So those are our weekly percentages for week 31. Now we have our monthly percentages for week 31. So gold up 6.92% for a market gain of $8.04. So gold's still doing great. Loving gold. It's been going up for like 2 years plus. Really good. We have US dollar down 0.94% for a market loss of 74 cents. We have commodities up 2.96% for a market gain of $2.24. We have pretty good on commodities this month. I think it was better last month. I can't remember exactly what it was. Actually, I think it was around the same. But still doing good. Inflation, gold, and commodities still doing good. We have, excuse me 1 second. We have stocks down 1.40% for a market loss of 83 cents. We have bonds up 0.85% for a market gain of 37 cents. Then we have Bitcoin down 10.75% for a market loss of $2.24. Bitcoin is having a hard time. Bitcoin's having a hard time. Ever since it hit 100,000, it's really lost momentum. Then we have our, oh, whoops, was I going back? There we go, I hit the back button on accident, I think. That was our monthly. So there's our monthly percentages. Now quarterly. Gold up 10.86% for a market gain of $11.03. US dollar down 3.67% for a market loss of $2.55. Commodities up 10.01% for a market gain of $5.53. So 20% gain in the portfolio just from inflation assets like commodities and gold. So doing great. Stocks down 2.05% for a market loss of $1.07. Bonds up 0.85% for a market gain of 37 cents. This is going to be the same because this is a brand new ETF, so I'm not going to have a lot of data, unfortunately. So this is going to be repetitive on this one, unfortunately. Oops, hit the all-time. And then IBIT, our Bitcoin down 3.70% for a market loss of 63 cents. So that's the downside of this is whenever you change an ETF, you don't get the new consistent data. It's going to be the same again. So we're going to not have good bond information, unfortunately. That's okay. I had to make the change. I made the executive decision. All right, so now we have our all-time. We have our, remember the percentages changed, so this won't directly reflect the price. That's okay. Just look at the all-time. Gold up 22.99% for a market gain of $15.77. US dollar down 1.61% for a market loss of 73 cents. We have commodities up 18.56% for a market gain of $6.64. We have stocks up 1.87% for a market gain of 62 cents. Again, bonds the same because this new ETF, 0.85% for market gain of 37 cents. That's all it's going to be, 1 week's worth of data. And then we have Bitcoin up 58.78% for a market gain of $5.68. So this is our all-time data from July 21, with the exception of GOVI, and actually IBIT doesn't even go back to the very inception because I had BITO before, so it doesn't always give you the full percentage as well. But that's okay. This portfolio evolves over time. Then we have our portfolio changes. So this is every time I've reallocated a percentage of the assets in the portfolio. So the very first time I did it was on July 31st, 2024, where I decreased my commodities position in the USCI ETF, and I took that 5%, and I increased my government bond position with the GOVT ETF. So this is back when I had the GOVT ETF. Of course, that was a bad decision because commodities have been going up for so long. But again, this is in hindsight because this was back in July 2024. Most recent change was in January to the 27th in 2025, where I decreased my government bond position by 5%, and I then increased the commodities position by 5%. So I reduced my GOVT ETF, which I no longer have. I have GOVI now, and I increased my USCI ETF by 5%. So this was the position changes, so you can follow along, or easier follow along whenever I make a change in the portfolio. So we have our portfolio transactions for week 31. On February 18th, this is when I made the change to sell GOVT ETF, which you see right here, sold all of it out, and I exchanged it for GOVI ETF. This is basically more of a market-weighted bond ETF, and this is a equal-weighted bond ETF. So I wanted something more like GOVI. The whole reason why I got the GOVT in the beginning because it was spread across the yield curve, so multiple durations. But at the time, I never found more of like an equally weighted one until more recently I found this one. So luckily, I keep searching and I find things over time. But anyway, on February 18th, I swapped those and I did a rebalance. So you'll see some selling of commodities here, 89 cents, and some selling of gold here, $4.78. And then you'll see some buying of stocks, $1.21, US dollar, $2.16, and then Bitcoin, $1.44. So primarily just switched from GOVT to GOVI, and I rebalanced a little bit extra I had, and that was on February 18th. And then on February 19th was our $30 deposit, which happens every 3 weeks. So we had 6 buys, $30 here, and we just bought our assets based on their percentage. So stocks, we bought $4.73. US dollars, we bought $6.46. Bonds, we bought $3.42. Gold, we bought $9.44. Bitcoin, we bought $1.66. And commodities, we bought $4.45. So these are our portfolio transactions for week 31, where I switched bond ETFs and we had an auto deposit of $30. Now we have the Illuvium staking dashboard. So currently the IOV price is at $19.40, so below $20, pretty cheap, pretty low. We have currently 7.14 IOV staked, and that has a current market value of $138.47. We have our Illuvium investing for week 31, so you have the 6 here and then 1 on the next page. We have our very first one going back to July of 2024, which will unlock in 155 days. Then we have August, September, October, November, December. Each month, deposit $40 or buy $40 worth of IOV, then stake it. And then the most recent one on January 25th, 2025, we bought at the time 1.22 IOV worth, which was $40 at the time, which will unlock in 336 days. So that's our vesting. So I should have another buy of IOV probably next week, which I will stake. So we have our revenue distribution for week 31. So no new revenue distribution here. We have our current claimed IOV here, where we had 3 different payments, which total equal 0.024 IOV, or current market value of 46 cents. So no new revenue distribution this week. And that's it for our numbers. So now we go to our charts. So first is always gold. Gold. If you really go, this is what I was saying, like going back 2 years, October 22nd, it had like a good run up, but I like this trend here a little bit better. So going back to October 23, gold is still amazing. I talk about it every week. I don't know why people don't own gold. I think it's the stupidest decision ever if you don't right now. Inflation's not going away, at the very least not right now. But anyway, gold's still coming up. We still had this drop back in December to January where it just kind of came down and around and came back up. It's working way, it's back up towards a trend. Gold right now is around 2,900 something. You know, it's knocking on the door of $2,934, right? It's knocking on the door of 3,000. I'm sure everyone will be talking about gold then when it hits 3,000. Not all the way up here when it's been going up. But when it hits that big magic round $3,000 number, everyone's going to talk about it like, oh my God, it's a big deal. All right, they could have been owning it the whole time. They could have been at the very least owning it, going all the way back to October 22nd, which was the low here. This was a higher low, and kept going up. But this trend here from October 23 has just been beautiful. Beautiful trend. I still don't understand why people don't buy gold. Commodities still heading up. Just recently though, this little sell-off right here. This is what I was thinking was going to happen way back here, back in January 10th, around that time. Maybe January 13th probably. Thought it was going to be sell-off, but it kept going up, and then it's starting to sell off a little bit now. Still, if you go back far enough, you know, July 2022, sorry, not 22nd, July of 2022, this has been in a strong uptrend this whole time. And back in January 8th, 9th, about the 8th looks like, we broke out of this trend, we broke up and out, and then it's kept going up. So very strong commodity uptrend. I don't even know why. Everyone has a reason why they think they know why. I just say inflation. Because we're still experiencing inflation. But this has been a very strong trend. Very strong trend. It's even getting stronger now. I'm thinking there's be some more of a pullback because it pulled out of this trend. But I mean, back here, you know, you had this crazy fucking uptrend, and this is so vertical, it's crazy. This is crazy. Like this was going okay, and then just boom, just like ran up like crazy. So it's almost starting to look like that a little bit again. It's like just going up and going crazy. That's commodities. So we own gold, we own commodities, 30% gold, 20% commodities. So 50% of our portfolio is in inflation assets. So when inflation goes up, usually gold and commodities go up as well. And that's what we're owning. US dollar. This trend is concerning now. So if I look at where are you at? The DXY index, this is the US dollar. It's just really been coming down. It might be time to reduce it. It's even coming around this previous all-time high of back in April of 2024, kind of near July of 2024. It's getting concerning. Might have to reduce my position. I said this before, I would likely reduce this by 5%. So currently US dollars at 20%. I bring it down to 15%. And I probably increase my commodities position from 20% to 25%. But yeah, as of right now, we had this big run up, and we had the EX dividend date. That's what this sharp drop is right here. It's just people piled in to the ETF to get the dividend declared. And once it got declared, they pulled out and they got their payment and they ran, basically. So ETF kind of manipulation a little bit. But either way, US dollar not doing too good. Looks like it's heading down, so it might be. I might reduce this. We'll see what happens next week. But I might reduce this by 5% and increase this by 5%. And we'll go from there. We'll see what happens. US dollar though not doing good. Stocks. So I redefined this trend last week. So I just kept it similar to the SPY trend that we have. So I'm going back to September 22. Oh my lord, September of 22. Been in this large uptrend. We had a big sell-off here going from August to September to October 23. So big sell-off, and then it climbed back into this trend and stuck with it pretty much ever since. And then we had another big sell-off from here in November of 2024 going into December of 2024. Big sell-off here, but we're still kind of in this trend. We're still going along. So I've been watching it. I have stocks at 15%. Like I said, still not overall optimistic on the economy, so I don't really want to go higher. Like I said, if anything, I'd go higher with gold or commodities because inflation is just more sticky. It's going to stick around for a little while. But so far, stocks have not been doing too good. That's okay though, because I should say they have been doing good, but they've been kind of choppy. Just this most recent one has been kind of a sell-off. But if you compare that to the SPY, or I should say the SP 500, you have a stronger trend, mostly because it's allocated in just a handful of stocks, like the top 7. But you see the overall trend's been up, down, and up. So that's the S&P 500. We have the equal weight stock index, or the equal weight S&P 500 because I prefer that. But so far I've been keeping it at 15%. Now GOVI. So this is the new one. So I switched from GOVT to now GOVI. And I have some data here we'll go over, just to give people an overview of why I did this. So again, we're on X. We're just using the AI tool Grok. Let's do a quick overview. GOVI, which is the Invesco Equal Weight 0 to 30 Year Treasury ETF. This ETF tracks the ICE B of A laddered maturity U.S. Treasury Index, which includes U.S. Treasury securities with maturities ranging from 1 to 30 years. Unlike traditional market-weighted ETFs, GOVI uses an equal weight approach, which is what I want, meaning each maturity bucket, e.g. 1 year, 2 year, up to 30 year, gets roughly the same allocation. This aims to balance exposure across the yield curve. GOVT, the iShares U.S. Treasury Bond ETF, this ETF tracks the ICE U.S. Treasury Core Bond Index, offering broad exposure to U.S. Treasury securities with maturities of 1 year or more up to 30 years. It's market weighted, so not equally weighted, it's market weighted. So its holdings reflect the outstanding market value of Treasury securities. It's with a heavier tilt toward issues with large insurance, often shorter to intermediate maturities. So key differences, kind of what we just went over. GOVI equal weighted across maturities. This reduces concentration risk in any single part of the yield curve, but may lead to higher exposure to long-term bond-related relative to market cap weighted funds. GOVT market weighted, meaning it's more heavily influenced by the most issued treasuries, typically shorter to intermediate maturities. This aligns closely with the overall treasury market. So basically, because it's equally weighted, let's see, /GOVI. We'll do a comparison. Where's that tool? There it is. GOVT. Compare them. And holdings. Or not holdings. Where they at? Nope. Performance. Oh, it doesn't show me the holdings. What if I just look at GOVI? There we go. Okay, so the GOVI holdings, you see everything is on here. It's roughly around 3%. At this top one here, short-term investment government agency portfolio. institutional, whatever. But it's mostly at 3%. And if I look at the GOVT, the same thing. For the holdings, it will have these percents go down a lot. So 5%, 3%, 2%, then 1.5%, 1%, 1%, less than 1%. Oh, then there's like a whole bunch of them. Less than 1%. The GOVI was just the 30 different maturities, and it was all equally weighted. Everything around 3%, where this is just, they add on a lot, so it's more market weighted. So it's like it says, equal weight versus market weight. But if you compare the charts, which I think is more interesting, that's what I like to do. I like to compare the charts. I can click this button, there you go. GOVT, compare that. Then we'll compare the longer duration one, like TLT. We'll compare TLH, which is a shorter one. We'll compare IEF, which is a shorter one. Compare IEI, which is a shorter one. Is there SHY, 1 to 3 years? Yeah, a lot of lines on this fucking chart. Really gonna fucking like weird people out. Let's see, let's make these colors a little different so they stand out. Purple, red. Good enough. Okay, so if you look at it on a 5-year chart, you see this whatever color this is, like tealish color line. This is the 1 to 3 year. This is the shortest term, so it has the lowest volatility. Look how much these drop the longer the maturities get. This orange one here is IEI. This is the 37 year. This reddish one here. Oops. No. That's not what I wanted. There you go. This reddish one here, that's the GOVT. This is the original one I had. This green one's the IEF. That's the 7 to 10 year. The blue one is the one I'm using, the GOVI, so it's more volatile. Then the yellow gets even more volatile. It gets down here, TLH. This is 10 to 20 year bonds. And the purple one here is the TLT, is 20 plus year bonds. So I see the trend is overall the same, but the shorter the duration, the less volatility in it. So if I look at it on a 1 year, like I said, this teal line is damn near flat compared to all the other ones. And then as you start going further out on the yield curve, things will get more volatile. The most volatile being the purple, which is the TLT 20 year. So our blue line here is a little more volatile with the bonds compared to the other bonds, whether it's in a down or up market. But that's okay, right? Because I'm more interested in the equal weighting of the bonds. So each one is put about 3% across the 30-year maturity yield curve. So if I remove these though, and we do the exact same thing, but we do a new price scale. IEI, IEF, TLH, TLT, GOVT. So now if we look it over at a 5-year, it's a lot cleaner, you know, because it doesn't include the price volatility as much, right? Because all these bonds pretty much do the same thing. You know, why does it have all this shit? Oh, I know why, because it did the price scale. So it's not as volatile, it's not as separated, because bonds are going to trade relatively the same, but the further you're out on the curve, the more volatile it's going to be. So 20 year is going to be more volatile than a 1 to 3 year. So I get rid of these ones. I just get rid of all of them. Right, so our GOVI is a little more volatile because it's further out on the curve versus the GOVT, because its maturity curve is like less than 10 years, or this one looks like it's greater than 10 years. That's fine, so I'll have more volatility in it, but because it's equally weighted, that's more of the risk factor I wanted. So let's kind of just want to show a little bit of the difference between the GOVI and the GOVT. You can still see it's a downtrend over 5 years. Like as I said, bonds have been going down since the beginning of the pandemic. So going back here, you know, pretty much it's all the way down. Still the same, you know, all the way down. Bonds still suck irregardless. But switching to GVOI now, it's equal weighted. You see, based on the holdings here, it's more spread out. It's more diversified, which is ultimately what we want. Same thing with our S&P 500 ETF, as well as our commodities ETF. We want more diversification. So this is across the entire yield curve. So I got a 1 year yield, 2 year, 3 year, 4, 5, 6, 7, 8, 9, 10, all the way to 30. All right, one of each across the whole maturity curve, and it equal weights them about 3% each per asset, or per bond, I should say. That's our bond ETF. Last but not least, our Bitcoin ETF. So IBIT. If we go to the Bitcoin chart, you see as always, like it kind of hit around this 100,000 and it's just been going sideways. I show this every time. So far, this line's been holding up, going back to the 2017 bull run. Peaked here, then came down. Then the beginning of February 21, it peaked and then it came down. And then the end of the 2021 run, it came up again and then dropped. And now it came all the way up to 2024 and 2025. And it's still peaking again. So this line has been holding pretty good so far. So Bitcoin hasn't really broken out above it. So that's what I'm kind of looking at when I look at Bitcoin. So the Abbot's holding pretty good though, but the momentum has slowed. We had our big pop from the Bitcoin ETFs. We had our drop for about 6-7 months, and then going into the election, we popped again. Then once we hit 100,000, we've just been going sideways. And you also see that reflected in our numbers. So anyway, running out of time, gotta go somewhere. Anyway, I hope you enjoyed. The big change this week was the GOVI ETF switching from GOVT. Like I said, so now my USCI is more equal weight for commodities. My RSP is equal weight for stocks. And my GOVI ETF is equal weight for bonds. So I'm trying to, again, be more diversified, trying to spread out my risk. That's why I made these decisions. So as always, thank you for watching. Hope to see you next week and have a good day.